Last week we saw some strange signals in the market. Yes, the S&P 500 was up 1.7%, which is solid. And the sectors of the market were generally positive. All good news, but there's still some strange signals in the market. And we're going to talk a little bit about that. We saw some action in gold. Gold became its most overbought on a weekly basis, according to the RSI, in history last week. But we did see a signal last Friday that perhaps we could see a little bit of a pullback. We're going to talk about that as well, as far as the overall market goes. And we'll talk where the market stands as far as the volatility goes. So last week we saw the S&P 500 up 1.7%. All the sectors of the market were positive, generally spread out across the performance except for one sector. That was the financial sector. We saw the financial sector was flat last week. Now, if you recall, we saw the earnings coming out for the big banks on Tuesday, which kicked off the Q3 earnings season. And generally speaking, they were fairly well received. So how did the financial sector end up flat for the week? Well, it all has to do with the regional banks. The regional banks, and there's an ETF that tracks this, it's called, its ticker symbol is KRE, was down for the weekend. We saw investors become a little bit freaked out about regional banks last week. On Thursday, we saw Zions Bank Corp go down 13%. And we saw the Western Alliance go down 11%. Investors got really nervous. We look at the option action on KRE. The implied volatility for the puts skyrocketed on Thursday, and that just shows that investors were really getting quite nervous about this sector. Now, there wasn't any one particular action that really drove this. And if you recall that a couple weeks ago we saw Tricolor go bankrupt. That was a subprime auto lender. We saw First Brands go bankrupt as well. And that was interesting because we saw First Brands, and it has many, First Brands deals with auto parts. And we're familiar with a lot of the auto parts that companies that it deals with or has under its control. And yet it did really poorly and got wiped out in bankruptcy. And there's a lot of questions. Is this just a one-off? Now, the First Brands, some of the products would be like Frem auto filters, is owned by them. But here they were, this company was doing factoring on their receivables. And factoring is when you sell your receivables at a discount for the cash now. And typically you're only getting back 70 to 90%, less any fees as well, on your receivables. So why do companies do this? It's because they need instant cash. And call me old-fashioned, but I think you should just be collecting your receivables yourself as a company and not losing a huge amount of money for somebody else to do it. You know, First Brands went off and they had receivables of $2.3 billion that had been factored out, and they had double pledged. And so, you know, a lot of people came back and said, well, this is a one-off, we're fine, we'll get over this. There's some lurking questions in the background if this is going on somewhere else. And last week with the regional banks, there's really nothing that actually came out and said, hey, there's a big problem here. Investors are just all of a sudden coming up and taking a look, re-examining sectors. Now, regional banks have exposure to the commercial real estate business. So as a percentage of their business, it's 44% compared to large banks, which is 13%. Now, the regional banks, that's a big exposure to commercial real estate. And commercial real estate right now has a delinquency rate, office delinquency rate of 10.8%, which is really high. So we're starting to see some systemic cracks in that sector. Now, it's been kind of strange for me because I've been seeing these office towers selling for pennies on the dollar. Yes, pennies on the dollar. And especially if they're not high quality buildings. So if they're like rated like a C building or a B building, They're just not, they're really getting heavily discounted with huge losses. Companies are walking away from the buildings that own them because they're saying, well, it's just not worth it. We're not making money on this. And this has been going on for a while. I'm going, when's this going to crack? And perhaps we see this show up through the regional banks here. It's possible. We'll have to see what happens. Maybe it's just a little bit of an aberration here taking place. But we'll have to track that to see if that's going to lead to any other systemic issues as far as the market goes. If we take a look at the sectors of the market, we can see here the one that stands out here is on a positive performance note is gold. Once again, up over 5%. Gold miners up over 3%. Same with silver. So gold outperformed silver and gold miners last week, which is interesting in an environment where you saw the stock market positive. But all this action that we're talking about here in a second happened on Friday. So we've seen gold just go up, relentlessly so. And investors have almost had a little bit of FOMO with it. And gold has reached a level where it has become, on a weekly basis, its highest RSI value ever. Now, doesn't mean it can't go higher. Yes, of course it can go higher. But maybe what we saw on Friday, we saw all of a sudden gold just really correct quite sharply. It was down over 2% during the day. So maybe we're starting to see a little bit of profit taking here. We could see this pull back. Just so you know, on a seasonal basis, gold does tend to pull back here a little bit. October tends to be one of the weaker months of the year on a long-term basis. And we do tend to see some sort of pullback that can occur. And into December as well, sometimes. So maybe this is just a pullback in October here. But it wouldn't be surprising to see gold pull back here, despite having strong fundamentals. And, you know, strong tailwinds taking place. Central banks continue to buy. There's a lot of concern about currency debasement. Nothing's really changed, but maybe gold has become a little bit rich at this level and has a temporary pullback here. We did see some of the metals and mining companies actually on Friday also perform poorly as well. So we're going to have to see if that continues on a broad level here. So we have seen a rotation taking place into the metals and mining sector over, well, really since the springtime. The sector's done extremely well. I call it the stealth bull market because everybody's talking about technology, but the metals and mining sector is just taken off. And that's benefited things like uranium, gold, gold miners, etc. So we could see that pull back here a little bit. Doesn't mean the story's gone away. The case for the sector has gone away either. By the way, we're in Rhinebeck, New York State, upper New York State, beautiful part along the Hudson River. We're down here visiting our friends on the weekend. Absolutely gorgeous, so it's going to be a shortened video this weekend. So if we take a look at what's coming up this week, we can see the earnings are coming up and ramping up, I should say, this week. It's still not the busiest part of the earnings season. We'll have to see what happens this week. The week after next really starts to really get going, but this is the first full week of earnings for the Q3 season. October tends to be one of the more volatile months of the year, so we have seen some volatility. We'll have to see if that continues. From here, investors are still poking around at some of the narratives as far as subprime goes, into the regional banks, etc. We're going to have to see how that works out this week. If investors have just passed that up now and say, well, it's not a big deal, which is possible at this point here, we could see some further upside in the markets. We've seen the markets just continue to move higher here. Very little has held it back. We did see the Trump come out and put a dent in the markets the previous week when he talked about putting 100% tariffs on China in response to China putting on rare earth element export controls. And even last week, though, we did see Trump come out and say, well, that's unsustainable. And investors say, well, we knew that already because they do the taco trade, which is that Trump always chickens out on his tariffs. So far, they've been right, but I think this trade war still could heat up here a little bit with China, because China's calculating longer-term thinking. So they didn't just come out with this export control just flippantly. This is a longer-term plan. Maybe they're just flexing their muscles for the upcoming trade negotiations next month. Totally possible. We'll have to see what happens on that front as well. But the S&P 500 right now still is in positive territory and still showing upward momentum, although the concerning part is some of the air gaps we're seeing in some of the sectors of the market. So we'll have to see what happens next week and see if the regional banks are systemic and start to transfer into other parts of the stock market here. I'm not convinced that's going to be the case, but it is a possibility. Thank you very much for joining me today. If you like this video, please click the like button below, and please consider subscribing to the channel for regular updates. Thank you very much.